In the search for financial security, we often make choices that feel completely rational in the moment. But under the surface, these logical choices are actually hidden traps, quietly draining our wealth. Here are the top 3 stupid financial choices that feel logical until it's too late. The first trap is lifestyle creep, the silent killer of wealth. When you get a raise or a bonus, it feels entirely natural to upgrade your lifestyle. You buy a slightly nicer car, move into a bigger apartment, or start eating out at more expensive restaurants. But this choice traps you in a cycle of endless treadmill running. Instead of saving the difference to build actual freedom, your cost of living expands to consume every dollar you make. You end up working harder just to maintain your new baseline, leaving you just as vulnerable as before. The second trap is prioritizing safety over growth by keeping all your savings in cash. During times of high market volatility, holding cash feels like the safest choice in the world. You look at the stock market swings and feel relieved that your money is secure. But inflation is the invisible tax that eats away your purchasing power year after year. By avoiding all investment risks, you guarantee the certainty of losing value over the long run. True safety doesn't come from avoiding risk. It comes from managing it through diversified assets. The third trap is buying liabilities that you convince yourself are investments. The most common example is buying a home that is far larger than you actually need. While real estate can be an asset, a primary residence is a liability that actively drains your monthly cash flow. Between mortgages, taxes, maintenance, and insurance, the house is consuming capital that could be compounding in the market. If your net worth is locked entirely in the walls of your home, you are asset-rich but cash-poor. The fourth trap is letting fear of missing out dictate your investment decisions. When you see friends or internet influencers making quick gains on speculative assets, it feels logical to jump in. You tell yourself that you can get in, make a quick profit, and get out before the crash. But this is not investing. It is gambling dressed in financial terminology. Speculative bubbles always last longer than you expect and pop faster than you can react. By the time the average investor hears about a hot trend, the smart money is already leaving. So how do we break these psychological traps and build actual wealth? The answer lies in automating your financial systems. Instead of relying on willpower to save what is left over, automate your savings the day you get paid. Pay yourself first and let the system handle the discipline for you. Second, focus on increasing your earning power rather than obsessing over small savings. Your absolute best financial asset is your ability to generate income. Invest in your skills, build new networks, and create multiple streams of value. Third, learn to be content with having enough. The ultimate goal of money is not to buy luxury items. It is to buy back your time. If you can control how you spend your days, you are wealthier than any billionaire who is a slave to their work.